I've not come across the HODL model before, and this is something which the Rational Root came up with a couple of years ago, and it hasn't really got much sort of traction. But I came across this old article, and this was in 2022, where the Rational Root was talking about all this, and the picture looks like this. And what he is basically saying is that the last halving hit a bit of an inflection point where, if you look, so if you take this orange line here, this is the actual Bitcoin supply, right? So this is what's being emitted every 10 minutes, every block, etc. But when you look at this chart compared to the illiquid supply, and in this case, this article is saying that the illiquid supply is, I think, anything more than 6 months. Wait, let's read this bit. Here we go. Blah, blah, blah. Oh no, it's a little bit different. Circulating supply can be broken down into 3 categories: highly liquid, liquid, and illiquid. Illiquid supply is defined as entities that hold over 75% of the Bitcoin they take in. Highly liquid is defined as entities that hold less than 25%, and liquid supply is in between. And there is a bit of a pretty hard calculation here, but what they're saying is that illiquid suppliers, those that basically they don't sell, so they sell less than 25% of what's emitted. So really, they're talking about the miners here. And then down here, if we look at this bit here, I've blown up the picture so we can see it better, is a percentage of the illiquid supply compared to the circulating supply. So, long story short, what it means is that during this 2020 halving, we had this bit of an inflection point where the illiquid supply is starting to grow, because we're getting towards this plateauing of emissions curve, and people basically just not selling as much Bitcoin as they used to. When I say people, I mean the miners. Now, this is a couple of years old, so I thought, wait a minute, let's have a look. Can I try and update this chart? I can't find an updated version of the chart anywhere. So I went to Glassnode, and they, and you need the professional pack to see the liquid supply. So I thought, screw that. And I found an old tweet. So this tweet was from November this year. Sorry, November 2023. So let's say this is, 6 months old? And it's saying that the illiquid supply is 15.4 million. And you can see that this is trucking upwards at a nice cadence. So all I've done is just plotted it on here. So 15.4 million at that time point brings us to here. So we can get our little pen out here and just keep on doing this. And I guess it's probably going to do something like that. So where are we now? We are, so we're probably in the same area, pretty much. And then I've worked out what the floating supply of Bitcoin was in November, during that screenshot, during whenever this was taken. And I've worked it out as a percentage of the circulating supply, and it puts us right here. So what we can see is that this is, again, if you're taking that cadence, it's good cadence, and it means that the illiquid supply is now starting to rise, which again makes it even more bullish for Bitcoin. It adds more credibility. So the whole point of all of this is that it is adding more credibility to the power law for Bitcoin. And the fact that we are, I think it's just, we're going to see $1 million Bitcoin, $10 million Bitcoin, just give it time. Now the power law says we hit $1 million Bitcoin, I think 2034, is it? The next cycle, so just off the top of my head, the power law for Bitcoin says the next cycle, so 2029 cycle, you're looking at sort of 500k, and then end of 2033, you're looking at 1 million. So again, this is just another thing. I spend most of my research trying to find reasons why I'm wrong, and this just popped up, and I was thinking, I did a mistake, thinking, okay, this goes against my thoughts, and once I looked into it, I realized, it's just another data set or data point that corroborates existing thinking, which is good and also bad. So that's the HODL model.